Today, we're going to talk about liquidity. Let's delve into two different things: what is liquidity and the types of liquidity. Now, liquidity is the main core driver of price, as it is always acting as a magnet to whatever price is. This is because there are massive orders in highs and lows wherever liquidity can be found, and with that, price usually goes to where liquidity is. Let us look into the different types of liquidity. We have external range liquidity. This is the type of liquidity that you find in a dealing range. We have the range high and the range low. Now, price is usually magnetized to one of these two areas because there are orders sitting in either the range high or the range low. After that, we have internal range liquidity. Usually, this is noted by a fair value gap. When we see this fair value gap, price usually tries to come back down to it and then head back to external range liquidity. Next up, we have buy side and sell side liquidity. Now, we call them drawn liquidity simply because we have orders at the highs and at the lows. Usually, whenever we talk about buy side liquidity, we keep on checking to see if price keeps going to the upside, and the opposite is for the sell side liquidity. Price is always attracted to one of them, especially when you know the trend which price is in. We also have liquidity sweeps or liquidity grabs. This is when price makes a low and the subsequent low that comes after it is going to sweep the previous one with a wick. Alright, it has to be a wick, it cannot be a full body close. This can happen to the sell side and also happen to the buy side. So either one, the sweep is valid from the top or from below. Usually this shows that price might actually reverse and start going the other way around. And lastly, we have trend line liquidity. Now, if you noticed, we have a bunch of highs or a bunch of lows aligned almost perfectly. At some point, price is going to break out of that perfect kind of range and then begin to chase all that price where it came from. That is our drum liquidity. That itself is liquidity. If you're learning anything from this video currently, do not forget to give a like and subscribe to the channel to continue learning more. In the meantime, let us look into some examples. For our first example, let us look into Nasdaq on the 30-minute time frame. Now, as you can see here, according to our book examples, we have here this week, we have another week coming out, weeking it out. This one, cancel this one. So basically, all we're left here is a liquidity grab or a liquidity sweep. Okay. The idea here is that after this sweep, price is going to break to the upside and then we see some bullish price action. There we go. We see a break of structure to the upside and now price is finally bullish. As you can see from here, we have another sweep here. Price comes down to it around there and keeps going up. Subsequently, or in some way, we saw price going up, breaking the structure, came back again, use this guy as another block, and then went up from there, right? So the same thing happened around here. Now, what do we see? I just saw another sweep. Okay, we swept the liquidity around here, and what happened? Price started dropping from there. Okay, for this example on liquidity, we're going to look into JPB AUD on the 1 hour time frame. All right. Now let us look into something. Okay, we have this low, and sort of this one here. Okay, when you combine them, you see that they are somehow connected. Okay, they make up a trend line. Now, trend line means one thing: liquidity. Okay, and whenever we see liquidity, we take it. So where do you normally target when you see a trend line like this? Well, every single low could be a target. All right, the closer, the better. So let price play out and see what it does. Okay. As you can see, we're forming a new high around here. So far, so good. We're still respecting the trend, right? And let me pause here. We are reacting to something. Look at this candle here. Yeah, we're definitely reacting to something. Look at this liquidity sweep. So there we go. We have here our trend line. Okay, can extend it a little bit. See, the trick to trend lines is trying to find the line of best fits. Okay, so now what is the expectation here? Well, it's going to be POI around here that price is going to react to and then start dropping from there. If you're lucky, you're going to break through this trend line. You're going to break it fully, not just with weeks, and then you're going to drop from there. Let's see if that happens. We broke through the trend line finally. If you want to go for a more known approach, use your fair value gap and then you sell, stop loss at this sweep level over here. My targets, I usually like targeting the second low. So let's see what happens next. And price begins to fall. Let me speed up a little bit. Okay, we have hit our targets. All right. So just like that, we hit a 1:5.7. Now, this is simply because we have trend line liquidity. And what does that entail? We have sell side liquidity here, sell side liquidity here, sell side liquidity here, sell side liquidity there. For our third example, we're going to look into EURUSD on the 30-minute time frame. Now, let us look into this chart. We see here that we're in an uptrend, right? So far, so good. Seems that everything is all right. Now, we want to be looking out for possible changes in structure, right? Previously, we said that a buy-side liquidity is liquidity that lies at highs, all right? And sell-side liquidity is the liquidity that's lying at the lows, all right? So we want to be watching out for that because there is liquidity on both sides. There was liquidity here, it got cleared out. There was liquidity here, it got cleared out. Okay, so let's see what price is going to do next. We cleared the sell side liquidity. Now, since we cleared the sell side liquidity, there's a good chance that we are going to keep on clearing more sell side liquidity as time goes on. Make a new high. Where is our new buy side liquidity? Here. At the same time, we are not ignoring this one. This is still valid, but this has already been cleared out. So our new sell side liquidity is here. We still have these ones here untouched. Cleared once again. We have any new buy side liquidity? We do. This is buy side liquidity. We clear. We cleared the two of them. So now this is my buy side liquidity. We cleared what? The downside. Sell side liquidity has been cleared. We cleared it once again. I'll still leave it there. Now we are cleaning it to the upside. So these two here have already been cleared and we left this one behind. Okay. So now that we're clearing buy side liquidity, it's very likely that we keep on clearing more buy side liquidity. Okay. So when you're analyzing buy buy side liquidity and sell side liquidity. Usually we can call them draw on liquidity because price is going to be magnetizing to them every single time, so long as you have a good bias, you know the trend direction. Okay, in this instance we saw that the trend direction was actually bearish, so we kept on taking the sell side liquidity. Draw side on liquidity, the draw on liquidity at that point was actually bearish. All right, now we're going to have a bullish draw on liquidity. Okay, we're going to be aiming for the highs. Begin to make a little retracement, and we got what? Buy side liquidity again. Another retracement. Are you going for another one? Another buy side liquidity, which should be here. Do we get that? We do. So it's more likely that we're going to keep on chasing the same liquidity. Buy side or sell side is going to be your new drawn liquidity. All right. So this one actually depends on the change in character and the trends that we are seeing. Okay. So you have to take note of that. For this example, we're going to be looking into JPB, JPY on the 1 hour time frame. Now, remember that we said that external range liquidity usually lies at highs and lows, old highs and lows, weekly highs and lows, daily highs and lows, and all of that. All right, it's true, it's everywhere. Now, internal range liquidity, on the other hand, is basically a specific type of liquidity. We're looking for fair value gaps mainly. All right, so let's check if you can see any fair value gaps here. I think I can cite one here. All right. Thing about fair value gaps is that it doesn't matter the size. What matters is that they're being used. So let's see if this one is going to be respected. We have a breakout structure. All right. So basically, we took out the buy side liquidity here. Now, from this idea that we have here, okay, we could assume that price is going to retrace back a little bit inside here. Why? I believe because we are in the discount area here. We're going to see more of that in our next video. What happened? Price came to the discounts, is the fair value gap on the discounts, and now we're going to see if price is going up. So this here is our internal range liquidity, and now where are we going to aim to? External range liquidity. Let's see if price does that. Once again, we are right. We took out the buy side liquidity. Where's the next fair value gap here? This guy. Let us see if price is going to come back around here. And where are we going to aim to? This set of equal highs. We did not touch. Now we did. As you can see, price touched internal range liquidity once again. Let's see what it does next. Still maintaining our goal. Okay, it has already been cleared out. So now we have this as our external range liquidity. This was external. This is now the external range liquidity. And now looking at things from here, we just made another fair value gap here. Let's see if price is going to come back to it and continue to our external range liquidity. We managed to get into our internal range liquidity, and now we just cleared external range liquidity. It's as simple as that. So if you like what you see on this video, if you learned something from it, please don't forget to subscribe and drop a like. And we're going to meet again in our next video. In the meantime, comment which of these type of liquidities did you find the most impressive.